All right, good afternoon. I'm gonna talk more about emotions when you're trading something as volatile as cryptocurrencies. I've got the Wall Street cheat sheet pulled up on the left over here. I'm gonna kind of go over that again, but there's a few things that can cause you to have high emotions, and typically people with that are real neurotic about how much money they have in the market has to do with having too much money in the market. Um, Whenever I started cryptocurrencies, I put a lot of money in the market at the high while it was correcting. But I kind of understood that the more, I kind of like to throw myself in the fire and deal with it pushes you to actually learn more, which was a good thing for me. But I understood where cryptocurrencies were going to go, and that's really hard to control your emotions when the market's going down and you don't really understand the tech as well or understand how valuable these can be. Basically, what happens, humans move towards more convenience and they get rid of third parties. So if we can use stable coins on a blockchain instead of money in a bank, it's more convenient. There's going to be more money that flows into you know people that just the average population. And plus there's problems with banks and whatnot. So if we can use a blockchain instead of a bank, getting rid of the third party, and for the blockchain to be trusted by algorithms and being able to verify the blockchain, I think we're going to move more towards that in the future. Basically, we're still really early, but the main thing that is going to drive you to lose a lot of your money is just having too much money in the market. Uh, Cryptocurrencies are really counterintuitive to the traditional banking system or the stock market. It's not really publicized all that well yet. So when something is counterintuitive, you have a lot more neurotic behavior. So you think you're doing the wrong thing when you're investing in cryptocurrencies because the price is going down. But that's actually how you get really wealthy and you become an early adopter. So you just kind of want to understand that first off. We're all taught, save your money in the bank and you know keep it in there, and save it up for a house, and we're taught this story basically, and that story just doesn't work anymore. When you're earning less than a fraction of a percent in a bank account, and then cash is being inflated, it's just not a good idea anymore. It's better to buy assets. Um, Bitcoin is an asset. A lot of the other cryptocurrencies are assets. I like to diversify my money into a lot of different speculative assets because they're all just bubbles. I mean, you just need to know how to get out of them somewhere around the top. And that's what I'm teaching you based on the indicators and human behavior and whatnot. Um, so basically, what creates bubbles is the most instinctual behavior humans have is money. Like their relationship to money. So everybody's attached to money because money buys food, it buys shelter, it buys a lot of different things. So we're emotionally attached to it. We think we need money to survive, and which we do. But you don't want to really be so attached to it that you're just hoarding money, because then you'll never really have it. Just realize that money's infinite, and as long as you learn a really good skill and you produce value in the world, and you think that you as a person is valuable, you'll be able to create more money. Money's just, it's infinite. People don't get rich when they just hold on to money. They just don't. I mean, you want to keep your wealth, but you don't want to just, you know, hot, what's the best term for that? Just being in fear of losing it. Another way to control emotions is understanding the market. So to the left here, you've got, disbelief, hope, optimism, belief, thrill, euphoria, complacency, anxiety, denial, panic. Okay, so everybody is going to feel these emotions no matter how much money you have in the market. Um, the more you have, the more intense, I suppose, but just pay really close attention to your emotions. So if you're feeling like I kind of feel pretty optimistic, or I'm in belief, I would say, with my positions right now. I'm not really in thrill right now or euphoria, um, but I think we're getting pretty close to this right now. I'm pretty optimistic and in belief, I would say. Um, but everybody's going to have these same emotions. Humans are all exactly the same when it comes to emotions. And then whenever we have thrill, you want to start paying attention. So whenever you're really excited, you wake up excited because the market's going up. Um, that's when you want to really start paying attention to the indicators. Is there potentially a top on the indicators? Is momentum starting to slow down? Is there divergence on the chart? That's where you want to start looking in euphoria. Is there divergence? Typically what happens is nobody buys in disbelief except smart money, because it's really counterintuitive. The price is going down, even though it's all cheap. Nobody wants to buy because they're scared. And then once optimism hits, then a whole bunch of people start to pile in, and then people start putting more money in thrill because they're euphoric or whatever. They think the market's going to go up forever. So they start putting more of their savings in there because they think, oh, this is a great idea. Or they look down at the lower prices and they think, well, I should have put in more money there. Well, I'll just put it in now and take it out in a short while. And then in euphoria, when you're euphoric, you don't want to sell because it gets rid of that euphoria. Like all the dopamine and everything that's going on in your brain, it's really difficult to sell up here. Unless you understand divergence, you understand local tops. It's even pretty hard to sell then, but you get better at it. So taking practice selling in thrill and belief on local tops is helpful, because once this happens here and you get complacent, you start thinking, well, I should have sold up here. It'll probably go back. It'll probably go back up. And then once it gets down here, it's hard to sell because you've lost 60% of your money or so. And then it keeps going, it keeps going, it keeps going, and then you're just depressed. You're angry, you're depressed, you think cryptos are dead, the news is talking crap about it, and you end up selling down here. So just understanding, just being aware of your emotions and what's going on in the market is really key for everything, for taking profits, for beating the crowd. And then as well as in disbelief. This is kind of a funny story. I ran into a guy yesterday. He's I would call him, he's pretty egotistical. He was at this place I was at last night, and I haven't seen him for maybe a year or so. And he comes up to me and he says, "Hey, how's it going?" And I introduced him to my girlfriend, and the first thing that comes out of his mouth, he's like, well, my girlfriend said, "How do you know Michael?" And he said, "Well, we both like money." And I don't I don't really know where he was. He's just kind of egotistical. But anyway, he looked at me and he said, "How's your Bitcoin doing?" And I said, pretty good. And because I told him about Bitcoin a couple years ago, and he was laughing. He's like, "Man, why are you putting your money in that stuff?" And blah blah blah. So egotistical people are probably less likely to invest in something that's a new emerging technology because they think they know everything. Knowledge is kind of a lagging indicator, but if you use your imagination and what can happen with new technology, you're more likely to catch these, disbelief and hope and buying early. So just keep that in mind. So I do want to kind of go over this here. So people were really euphoric in this area here. So each one of these is a market cycle. So you can see This is the first market cycle. Well, the second one. The first one's here. It's just not too much data. First one, second one, and then we're in the third one now. So let's start right here. So complacency. So if we zoom in, people lost, before we hit complacence, people lost about 56%. Okay, and they're just hanging on thinking it's going to rally. It kind of looks a lot like this right here, but I'm sure indicators were pointing that we were at a top. I'm just not going to pull those up. I just want to look at the actual psychology of what's going on. So they were complacent right here, and then it fell even more, and they became really, really anxious, fell down here, and they're angry at cryptocurrencies. The news talking crap about it, and it took several weeks later before we actually, so we were in depression down here, and even right here we were still in depression, and then it rallied here, and then we had some hope, and then it dragged on for 26 weeks or so. And people here will exit their position because people think that Bitcoin's dead because it's been going sideways for almost a year or half a year, and they're not buying, and then they start buying up here again, and then it drops down, and then they get tired of it. They got out of the market, and then it rallies up, people buy back up here, and then it goes back down. So human behavior it happens over and over and over. But once you can kind of realize the psychology of a market cycle, you'll know when to buy down here. So when your emotions are, you kind of want to throw up because you had some money in the market over here, that's when you want to be buying. That's the saving money to buy somewhere down here is key. And you can wait for breakouts and whatnot for that kind of confirmation if you need to. And then accumulation ranges, and then selling peak euphoria. But there were probably a lot of people bought up here, and then it just kept dragging down for weeks and weeks, and then they thought it was going to fall again, and then it went up. Whenever there's some kind of accumulation range, a lot of people will just say it's boring, it's dead, and the information will travel through the news. And when price and information, so your emotions are negative and then information is negative, you believe what is going on. So the way to convince somebody to buy something, like if you're a good salesman, you can make them feel really euphoric and then sell them something when their emotions are high. So you can, like if they have some intrinsic value for something that you're selling, you can say, you can create a vision for them and make them feel really euphoric, and then they'll want to buy that you have of value. And that's when you really want to be selling, is that euphoric state. When things are dropping, like I said on the news, if your portfolio is going down and then there's negative news, you're going to believe that that's true. But if you're aware of the psychology of a market cycle and what happens, because 99% of people lose their money in this market if they day trade or whatever, just understand that 1% is going to make a lot of money in this market. I mean, you can hodl, you can hold, but most people will sell down here. But just being very aware. The same thing happened here. This was a very long downturn before it bottomed. Where did it go? So the top was here. It bottomed here a year later. So it was dragging down for a whole year. And then it went sideways. So the news is talking bad about it here. Everybody says it's a scam, blah, blah, blah. And then people stop talking about it down here. There's no emotion here. So there's no reason to talk about it on the news. There's no clicks going on. There's no revenue produced. Smart money's just buying in this accumulation range. And they're being really, really quiet. This is where people laugh at you. So just like that guy that I met last night, or I saw again last night, I was buying down here, and he was laughing, and a lot of people were laughing. So it's just really counterintuitive to be doing that. Just be prepared for people to be, kind of making fun of you a little bit for doing that. Anything that has value, if you're doing it, people are going to laugh at you, because 99% of people aren't going to be rich one day. Blockchain's always going to be here. I mean, Bitcoin's always going to be here. It's the only thing that can be here forever. So basically, then we have the disbelief right here, and then we rally up to hope, and then it consolidates sideways for quite a while. And then we have optimism through here, and then belief through here, thrill through here, and then euphoria. So paying attention to your emotions, then starting to look at indicators. I mean, you're going to be able to feel euphoric. If you're in the market, you're going to want to talk to everybody about it. So like I saw, when you want to talk about something is whenever you feel really euphoric about something. So I'm going to try to think of an example. So if you get a promotion at a job and you're super excited about it, you've been waiting for it forever, it's very difficult not to tell anybody about it. Or even if you help somebody, let's say you help somebody on the side of the road, and you got out of your car and you started helping them, and you helped them change a tire, and you come home to your wife or your kids or whatever. If you feel pretty good about it, you feel good about yourself for being, a good person or whatever, you almost have to tell your wife or your kids. Like, it's very difficult to hide that. So when you start hearing everybody talking about cryptocurrencies or Bitcoin or Doge, is whenever you want to start getting out. I haven't heard anybody talking about Litecoin really. I've heard them talk about Doge quite a bit, and that's, that one's gone sideways and down. So Bitcoin, that was talked about quite a bit too. A lot of people have been talking about that, and since probably January they started talking about it a lot, and it's only gone up like 100% when altcoins have gone up 1,000%. So basically, when you're hearing about it on the news only talks about things that are topics that are euphoric, or when people are in belief or thrill, because they get more clicks. So it's just another indicator to know, hey, this is probably something I want to look at to start getting rid of. Okay, so let me see what else I've got on this topic. Okay, so any amount of money in the market is a learning experience. So think of when you have some money, you bought the top, okay? So, and it drags down, you actually learn something from this experience. So having money in the market, no matter how your emotions are going, just think about it as an educated experience. So maybe you're putting money in there in the market, and it was a year's worth of income. You're gaining a year's worth of education as well when you have money in the market, whether you win or lose. A lot of people don't want to be wrong. I'm comfortable with being wrong. I'm going to get things wrong a lot, but I'm also going to get things right a lot. And as long as I get more things right than wrong, I'm going to make some money in this market. And you always want to embrace failure. If you do a bad trade, maybe you write it down in a book, and then if you spend $5,000 and you lose $5,000 in a trade, you just spent $5,000 on an educated experience that hopefully you won't follow again. Maybe you followed a YouTuber into a trade. Maybe you blindly followed somebody into a trade without doing your own research. So that's something. Pain always influences people. So having money in the market on a downturn isn't really a bad thing. It's going to influence you to join maybe some kind of Patreon with somebody that understands what they're doing more. Also, Elliott wave is a really good indicator. So here's something I kind of want to show too. Let's see if I can enlarge this. So let's get rid of this real quick. And this one, it looks like, I think we're probably in optimism. I really think we're going to 210, but we might go up to somewhere up here in the fifth leg and then fall. It'll look like quite a bit whenever we do, but I'm speculating there. We're going to watch the indicators. Here's something really cool I want to show you too. So let's bring this down to a 3-day. So this is a pattern that we're repeating. Let's see, maybe it's right here. That we repeated in the past. Okay, so let's go down. Okay, so look at that, and then we broke above and then went into euphoria. Now look what we're doing right here. Looks like we tagged the bottom here. We broke out for one 3-day candle, but it looks like we might close back in there. What is this, close in 38 minutes? So hopefully we close back in here, and then maybe we dip a little bit and continue up. We'll have to see, but so we're doing the same kind of pattern we did back here, and then we broke. We might be somewhere in here, and then we tagged the top again. We fell out of the bottom, scared everybody, and then we went parabolic. So hopefully we can do that same thing. That's what I'm really hoping for. But I did want to show you that falling out of this pattern is not a good thing, and closing outside of it for a couple days or a couple 3-day candles, especially a weekly, that's not good. What else was I going to show you? Oh, okay. So Elliott wave. So I'm going to break down this. I've done this multiple times, but I'm going to do this once again. Okay, so understanding Elliott wave and where you are in the market cycle is really helpful too. So we had wave 1 here in this market cycle. Wave 3 was probably up there. 1, 2, complex, 3, sharp, 5. Okay? And then this was probably wave 1, complex, wave 3, simple, and then wave 5. So this should help you here as well. And this gets a little bit tricky on this one. So this might have been 1. And then 3 might be up here if we break out. Let's just say 95. And back down to 50 or so. Just because the move was so big, I think we're going to have some kind of correction, and then a final wave up to 210 or whatever, wherever we go. Don't look at price. I just want to show you where it looks like we are in the cycle. Okay, so if you can understand that, you're going to be less fearful of buying down here. This 3 to 4 is going to smash the alts. if we do something like this, it's going to smash the alts. There might be a liquidity event, and I did a video in the Telegram that if we have a drop in Bitcoin from 3 to 4, the first couple weeks, the flood of money from Bitcoin could go into the alts. Now that might not happen here, but I expect it to happen at least at wave 5. But you're going to have to weigh your risk and reward when we peak at wave 3. Should you stay in the alts? Should you sell the alts? Should you sell them and wait? Should you, we'll go over that when we're starting to get kind of toppy here, and I'm starting to get kind of nervous. But just remember, when you start feeling euphoric, you need to completely rewire your brain to start paying attention to, like, hey, this might be a good time to sell. And yeah, sometimes you're going to get out a little early, but you can also sell part of your position. You don't have to sell all of it. Selling part of your position on the way up is really helpful. Alright guys, I hope that was helpful. Let me see if I wrote down some stuff. Okay, so this gets kind of deep too, but this is the last thing I want to talk about. Part of who a lot of people kind of keep up with the Joneses. So part of who they are is how much money they have, and that's kind of in my opinion, that's kind of a dangerous place to be, because you want to just understand that you're more valuable than how much money is in your bank account. And when you learn this kind of stuff, you can realize that you can always remake that money. It's just part of the ego. Okay, I guess that's all I've got. Hopefully that was helpful for controlling emotions, just understanding the charts better, making sure you don't have too much money in the market. If you do, you're going to feel pretty neurotic, and just understanding all of this is really helpful to ease those emotions. But that's probably the main reason. But it'll educate you more. The more nervous you are, the more you're going to want to learn about this and understand Elliott wave and different theories and different trend lines and everything like that. So that's all I've got for today. Hopefully that was helpful. I went kind of long today, but I think this was really important.